Alright then, good morning everyone as we enter European trade on Thursday the 14th of March, and a relatively quiet morning, and it has been a relatively quiet day yesterday, quiet morning this morning, and it's probably likely to continue, and hopefully we can get some US data kick us into gear a little bit later on. So I mean, it's probably going to be a bit of a short video today, to be perfectly honest with you. I mean, investors look the next round of US data. Currency market muted ahead of key US economic data. I mean, every US economic data print is key if you listen to these news sources. So apart from that, I mean, it's kind of clutching at straws, talking about different things up and down. But I mean, ultimately, you go and have a look at this grid. Things are a bit all over the place. Stocks are slightly higher, but they're not really doing anything. European stocks mixed, Asia Pacific stocks mixed, commodities are mixed and not up or down by any massive amount. You look at bond yields, US yields are higher, which is the one mover is bond yields, but we'll have a look at that in a minute once we get around to it. FX across the board, I mean, some currencies are up, some currencies are down. I can tell when Euro's down across the board, Swiss is down across the board, and Japanese yen is down across the board. It just shows you that there is next to no change in any of these currencies. Euro supposed to be lower across the board, minus 0.17% against the Kiwi dollar. Swiss biggest one is down minus 0.15%, so that's not exactly massive moves across FX, and as the previous headline said, FX muted and financial markets are muted as we head towards trade for the rest of this week. You can see the US dollar a bit all over the place. Some are a little bit up, some are a little bit down, but ultimately choppy range-bound price action post CPI. A couple of days ago, equity markets, bit of a rally off the back of CPI, managed to grind its way higher, but ultimately throughout the entire day yesterday, just chopping sideways. Market doesn't know what it wants to do. Still on the buy side, I mean, I use these indicators certainly for the S&P and the Dow Jones. The trend is still clear, the trend is still bullish. Right, put on a bit longer time frame, it is kind of chopping around, but the trend is still higher from a longer term perspective. Put it on a daily chart, it's pretty clear to see where the trend is. So obviously that's not going to move up in a straight line. Obviously it's not going to continue moving higher forever, but our markets are trending higher at the moment. You've got to stay on that side of the market, but at the end of the day, it does get a bit choppy from time to time, and that time is now. So we'll probably have to wait to get through PPI before we get any sort of fresh move off the back of equities. Currencies likely to be somewhat the same. Stick them on a daily time frame, even the higher time frames. Not a lot of clear direction, but I guess we'll have to cross that bridge when it gets to it in a few hours time. The one mover though is yields trending high. A 10-year and your 2-year trending higher. Now the reason why it's not causing any big strength in the US dollar or any kind of weakness in the equity markets, likely due to the fact that you're getting bond yields across the board rallying. You get the yields on the bund rallying, like even Japanese bond yields trending slightly higher, as you can see. I mean, the candlesticks are a bit messed up. If I put that on a line chart, you can see it is still grinding. It's grinding its way higher. If you get, it's UK. What am I doing? Look at the yields on gilts. I mean, last few hours they kind of had come off a little bit, but ultimately they've been trending higher as well. So it's not like it's just US dollars, not like it's just US yields, should I say, pushing higher. But again, I mean, unless you're a trader of bonds, what are you going to do with that information if it's not causing any movement across markets? And like, that's the thing with doing analysis of markets. We're not in the business of just kind of doing analysis for the sake of doing analysis. You got to try and find tradable opportunities, and ultimately it's not really presenting us with much tradable opportunities, is it? Oil inventories, yesterday a bit of a back to the calendar, you can see Wednesday of yesterday, a bit of a miss on oil inventories, a bit of a draw, helping prices push back a bit higher. Pretty aggressive move yesterday in the price of oil, but not much really outside of that, to be perfectly honest. Quiet day on the economic calendar apart from that US data a little bit later on, so we'll keep an eye on that. PPI retail sales might have a bit of a reaction, or maybe something similar to NFP last week, where you get one figure out first and another figure comes out and kind of negates that. So be a little bit careful at 12:30 in terms of what you'd expect. Again, you're going to have to, inflation higher the other day hadn't really made much of an impact on markets, and again you're looking back to Jerome Powell of last week suggesting interest rate cuts are close. Is the way you're going to have to play. You're going to have to hope for all these economic data points to come in lower. bring forward the prospect of interest rate cuts. But some interesting comments, if that doesn't play out, is if these come in higher than anticipated, you get core PPI, jobless claims. We've got a few data prints out today. Now, if they come in higher than anticipated, we have had some comments out from Yanis Stornaras, if that is pronounced correctly. Obviously, it's probably pronounced a little bit different due to my accent, but members of the ECB policymaker, we need to start to cut interest rates soon, should not exaggerate the risk of a wage price spiral, so they can't leave that out, but does not buy the argument that the ECB cannot cut rates before the Fed. 4 rate cuts in 2024 seem reasonable, but I think an interesting comment is we have to cut rates twice before the summer break. Need to start rate cuts soon, have to cut rates twice before the summer break. And that has caused a bit of downside in the euro, or certainly did initially when I was looking at it. Kind of stalled the last 5 or 10 minutes since I've been doing this video, but that would be weakness, which would be strength in the US dollar. So I think if you're going to play any strength in the US dollar, the euro is the one to play. And if you're going to play any weakness in the US dollar, I think dollar yen's probably not a bad idea. There's still a part of me that thinks sterling probably not that bad of a buy, to be perfectly honest with you. If you're playing some weakness in the US dollar, that opinion's not that widely shared by people, but a pretty short recession in the UK. Plus, then you're looking at interest rate cuts in August when you're looking before that from other countries. I don't think it's the worst idea in the world to be looking for longs on sterling. Again, I don't say that with massive confidence and think you should go piling into sterling, but yeah, I don't think it's the worst idea in the world. Something we'll have to keep an eye on in the coming weeks ahead. But tricky markets at the moment. We're going to have to wait for PPI to kick markets into gear. We've got a massive week of economic data next week, which we'll have a look at once you get around to it. So multiple central banks. You've got the Bank of England, you got the Fed, you got the BOJ, you've got the S&B, a number of other economic data prints throughout the week. So massive week of economic data next week. I mean, that causes for a bit of chop throughout the rest of this one. But anyways, don't go crazy. Keep your money in your pockets if you can. Any weakness in the US dollar, I think the Japanese yen and sterling would be a decent bet. Any strength in the US dollar, I think short some euro dollars wouldn't be that bad of an idea.